Welcome to BigONE Weekly News Update. I'm Sophia. Last week, the cryptocurrency market experienced continued fluctuations, with Bitcoin dropping approximately 2.5%, closing around 88,150. Ethereum remained relatively stable at about 3,060, while Solana saw a decline of roughly 2.15%, finishing at $129. These movements reflect a broader trend across global risk markets, which have been volatile due to the interplay between Federal Reserve meetings and developments in AI. In traditional markets, the S&P 500 fell by 0.63%, and the Nasdaq experienced a more significant drop of 1.62%. Conversely, the Dow Jones Industrial Average rose by 1.05%, and the Russell 2000, a small-cap index, gained 1.19%. Europe's Stoxx 600 index saw a slight decrease of 0.09% for the week. Bond market dynamics. The U.S. Treasury yield curve has continued to steepen, with the 10-year yield closing around 4.18%, an increase of about 4 basis points over the week. Additionally, gold prices rose approximately 2%, while the U.S. dollar index, DXY, fell by 0.6%. This divergence in asset performance indicates shifting investor sentiment amidst tightening liquidity conditions. Federal Reserve's dovish signals. The dovish signals from last Thursday's Federal Open Market Committee, FOMC, meeting exceeded market expectations. Although a 25 basis point rate cut was anticipated, the overall tone was more accommodative. Key points included: market concerns alleviated. The dot plot did not indicate a more hawkish stance, alleviating fears of no rate cuts in 2026. Instead, forecasts for economic growth were raised for 2026 to 2027, alongside lowered inflation expectations. Dovish communication. Fed Chair Jerome Powell's remarks were notably dovish, reminiscent of his statements during the Jackson Hole Conference. He emphasized risks in the labor market while downplaying inflationary concerns. Liquidity injection. Starting December 12th, the Fed initiated a technical balance sheet expansion, purchasing $40 billion in short-term treasuries, exceeding market expectations and injecting liquidity into the money market. Liquidity tightening reversal. From a repo market perspective, signs of tight liquidity that began last week have started to reverse. The Treasury's TGA balance has fallen below $800 million, indicating a shift in short-term funding pressures. The Fed's announcement of short-term Treasury purchases is seen as a proactive measure to alleviate these pressures, marking a significant easing of previously tight liquidity conditions. Long-term bond sell-off and market concerns. A notable development last week was the synchronized sell-off of long-term bonds in developed countries, reflecting rising concerns over fiscal sustainability. As refinancing risks increase, capital is increasingly favoring hard assets and super-sovereign monetary forms, such as gold, which has continued to rise, while Bitcoin's performance has lagged. Trends in Bitcoin and Ethereum. Recent data from Bitcoin ETF fund flows indicated a significant net inflow last week, raising questions about whether this trend can sustain through the upcoming Christmas season. Meanwhile, Ethereum completed the Fusaka network upgrade, increasing blob capacity and lowering gas costs to their lowest levels since 2017. The recent decline in Bitcoin prices can be attributed to tightening liquidity and a trend among large holders to take profits based on historical 4-year cycles. As institutional interest in Bitcoin grows, traditional supply dynamics are shifting towards a new 2-year cycle, driven by ETF flows and institutional evaluation cycles. This week is poised to be pivotal, with several central bank policy meetings, including those of the Bank of England, Bank of Japan, and European Central Bank, coinciding with crucial economic data releases. Any surprises in these announcements could lead to significant market movements, particularly as the Bank of Japan considers resuming rate hikes after an 11-month pause. Join BigONE today and take advantage of the growing cryptocurrency market.